Welcome everyone. Thanks for joining me. We're going to do a short tutorial on how to trade a stock index that you're probably overlooking. And we're going to look at how we can do this using some automation and some algorithms that we've developed. And you don't have to screen watch and you don't have to spend hours in front of the screen. So with that said, do take a moment and look at the risk disclosure. Remember, when trading, only risk capital should be used, and past performance is never a guarantee of future results. So I wanted to point this out. This just came out the other day. You've all heard of the Magnificent Seven, and it turns out they're the top contributors to earnings growth for the S&P 500, and we're looking at Q1 of this year. But actually, there's only 5 companies that are making the bulk of the results, so to speak. It's NVIDIA, Amazon, Meta, Alphabet, and Microsoft. And this is interesting. If you exclude those 5 companies, earnings decline for the remaining 495 companies in the S&P 500 would actually be negative 6%. So you'd have a negative 6% earnings decline if you didn't have these 5 companies in the S&P 500. So the blended earnings growth rate for the entire S&P 500 is 0.5%. So there's just a lot of concentration of really weighted concentration of value, or contributing to value, I should say, with those 5 companies in the S&P. So what if you want to look at an index that's actually acting a bit more like an index should with broader exposure? And here's just a graph of what this looks like. You've got those 5 companies again accounting for 64% of Q1 year-over-year earnings growth. And the other 495 companies, you'd actually have negative 6% earnings growth. So we're going to take a quick look at the Russell 2000. And this is just a comparison here. You can see the black line is the Russell 2000 and the blue line is the S&P 500. And there is quite a bit of correlation, generally speaking, in direction, but day by day, not necessarily. And you can actually look here. Here's a good example of Russell 2000. Here we were at the end of last year, and now we're right back at really at the exact same level, almost 6 months later. Meanwhile, the S&P, of course, has made new all-time highs. So, and that again is because of those 5 companies being a component of the S&P. So what I want to do here is show you how we can, let me switch screens here, show you how we can look at the Russell 2000 and some option strategies on that. All right, what you're doing now is looking at Theta Trader. This is our proprietary options trading platform. And this is just a demo account we use for these types of tutorials. You can see here we have Theta trades every day. Here's our open short positions, open long positions. This is your account information pulled directly from your trading account, and then any current price quotes here. But what I want to do here, you notice there are bullish strategies and bearish and non-directional or neutral. And we have the E-mini S&P 500, NASDAQ 100, and Russell 2000. These are the indexes that we're focusing on. And for this, we're going to look at just the Russell 2000. And we're going to look at a strategy called a dragonfly. It's a non-directional strategy, similar to an iron condor. And we'll just go ahead and pick this trade here. This is the June expiration. Let's take a look and see what the algorithm developed for us. It takes just a moment to generate the output. And I'll get into this in just a second, but let's look at a graph. This might help kind of paint a picture of what we're doing. So here's the current market price, and we're actually selling call spreads above the market and put spreads below the market. And the net result of this is you collect premium from selling the puts and the calls. And then the idea is that you're looking for this market, this price here, to stay generally speaking, within this boundary. And you can see here, this expires on June 21st, 37 days till expiration. It's the E-mini Russell 2000 index. That's the underlying index on this option spread. You've got your settlement value, the premium collected, your put risk, call risk, commission, available capital, cash required, profit potential at expiration. This is your targeted return on cash, and then your targeted annualized return, which is really there just to compare one expiration to another. And you'll notice here the puts that you're selling, the calls that you're selling. You can modify these strike prices if you like, but that sort of defeats the purpose of the algorithm doing the work for you. And you'll notice it defaults to always selling one position as a quantity one, but we can change that. And you'll notice as we change that, the cash required moves up and down appropriately or accordingly. And I'll also point out the difference between the Russell 2000 index and doing a dragonfly on the S&P index, which is it's half the price basically, or half the cost in terms of margin. So the margin here just over $2,200 on the Russell, and you're trying to capture just over 7 points in value. And if you were to do a similar trade on the S&P 500, the cash required would be closer to 5,000 to try to capture a similar dollar value. So we like the Russell and lots of reasons. One of them is what we kind of just talked about a few minutes ago. It does add to a little diversification if you've got a portfolio filled with some E-mini S&P 500 spreads already. And the way to do this here is simply select your quantity. We'll go and do 4 of these for the sake of this demo. We'll click place. Then you can see here, it just assumes that we're filled because this is just a demo account. So you sold these 4 at 720, and if you were to go back onto your dashboard, and you'll be able to see them on your open positions. So let's give that a second. Okay, and there we have it. You can see all your open short positions here. It's a combination of S&P and Russell trades, and there's a NASDAQ here as well. And then your open long or bought positions. And that's going to wrap it up. Just a short tutorial on the Russell 2000 and doing the Dragonfly spread on that. And of course, if you need any other explanations, or if you have any comments or feedback for us, do feel free to give us a ring. You can also sign up for a demo account. I'll make sure to put the link down below the video. All right, that'll do it, and have a great day. Bye-bye.